Hey guys, it's James and welcome to my weekly update for my 2022 M1 Finance Battle. This is where we take 5 covered calls, 5 S&P 500 ETFs, 5 REITs, and 5 Nasdaq 100 ETFs and see how they perform on a weekly basis. This is week 2. This is how the value of the account has changed over the past week. We started with about $1,000 last week. Last week was our first week and we are sitting at around 960. So it was a pretty poor week this week. We lost about $40 worth of value with our $1,000 starting amount. So this is what it looks like. Our start, we started with $250 in each category, and the Nasdaq 100 performed the poorest, with the covered calls performing the best. So this is what the numbers look like, and every week I will highlight the winner and we will see who comes out on top every month and every quarter and by the end of 2022. Let's go over to our weekly tracker and let's take a look at the REITs. We have American Tower Corp, AMT, Digital Realty Trust, DLR, Realty Income Corp, O, Vanguard Real Estate ETF, VNQ, and Welltower, WELL. And Welltower was the winner in this group. It actually gained. It gained $1.01, and it was I believe only 2 out of the 20 holdings that we have actually gained instead of lost. So Welltower finished at $51.01, and since we are only a week out, the graph hasn't separated enough, but you can see Welltower is in front for the REITs. And then covered calls, we have DIVO, QYLD, RYLD, XYLD, and PBP. And PBP was the best covered call out of these 5 different covered calls. And honestly, I believe the covered call, and if you remember, the covered call actually did perform the best for the first week of January. So in total, it only lost $2 compared to the REITs, which lost $10 total. Let's come down to the S&P 500 ETFs, IVV, SPLG, SPY, VOOG, and VOOV. And VOOV is one of the 2 holdings that we had that actually increased in value. And if you take a moment to think about it, VOOV are those value type of stocks in the S&P 500, stocks like the JP Morgan, Johnson & Johnson, long-term companies that are paying a quality dividend. Their stocks are not going to move very much. There's not much growth in those companies. They have long-standing products and they pay a very decent dividend. That's why we did not see much movement in the stock price for VOOV, but we did have a little bit of a gain. Let's come down to the Nasdaq 100 ETFs, and this is where it gets a little interesting. The Nasdaq 100 QQM was the winner in this section. QQJ, QQQ, QYLD, and TQQ. Now, if you recall, QYLD and TQQQ are the leveraged funds. So when they lose, they're going to lose really bad, and when they win, they're going to win really good. TQQ is leveraged 3 times and QLD is leveraged 2 times. In the most basic terms, they use debt to try to beat the market. But when the market is down, QLD loses twice as fast compared to the regular QQQ, and TQQQ loses 3 times as fast. So that is the results. Let's go over here and I'll show you a quick overview of each of the holdings that we have and each of the categories. Now, I highlighted in purple each category that kind of is the strength for each category. So for the REITs, they have a fairly decent dividend, more higher than average, and their expense ratio is basically 0. The only reason we have an expense ratio is because the Vanguard Real Estate ETF is an ETF and it has a management to it, so it has a small expense ratio. And then their growth is also decent, fairly average. It comes close to tracking the S&P 500 index, and these are cumulative returns. The cumulative return for all 5 funds averaged is 69% for 5 years and 159% for 10 years. AMT owns a large portion of land that has cell towers. Digital Realty owns a lot of real estate for data centers. Realty Income Corp owns the land that has 11,000 commercial type of properties such as Walmart and Amazon. Vanguard Real Estate ETF actually has has a collection of multiple different REITs inside of them, and Vanguard manages it for a fee. And then Welltower is real estate for the senior care and senior living sector. DIVO, QYLD, RYLD, XYLD, and PBP are covered calls, or the owner of each fund buys and sells options on these covered calls, and they buy and sell on the S&P 500, Nasdaq, Russell, S&P 500, and S&P 500. So each one has probably their own technique, whether you buy a call or a put, or you sell a call or a put. Each one has its own approach to it, and this sector obviously has the highest dividend, but it also has the highest expense ratio. So most of your returns are going to be coming in dividends, not in the growth section. Now the S&P 500, I didn't highlight anything here because it wasn't really a standout. It's just real even across the board, has a low expense ratio, an average dividend yield, and you have your decent S&P 500 cumulative growths. And then the Nasdaq 100, it has the winner in its side is the cumulative growths. You can see over the past 10 years, there has been fairly decent growth. Just taking a look at the non-leveraged fund, the QQQ, it has had 620% average, or 620% cumulative growth over the past 10 years. And you see these funds right here, the Nasdaq has been doing very well. So the reason why these funds have had massive growth is because they are leveraged. Now, if we're in a bear market for an entire year, I would imagine this 11,000% to go down significantly if we had a bear market for any extended period of time for the Nasdaq. And then the difference between these different Nasdaq funds is this is simply the tech-heavy Nasdaq, meaning it holds Apple, Microsoft, Amazon, Tesla, and it has a total of 102 holdings. The QQJ is very tech heavy, but it holds the mid-cap companies instead of the large cap. The large cap meaning the Apple, Microsoft, Amazon, Tesla, and the mid-cap meaning companies, I believe their largest holding was a company called Fortinet, which I've actually never heard of before. And then the QQM, it actually mirrors the QQQ in the holdings, but it was made for buy and hold investors, not for the traders that go in and out for the massive gains and then the massive losses. It's not for those that try to time the market. So that is our week 1 update for 2022 M1 Finance Battle. If you guys want to see something added to this battle, if you want to see a different type of analysis to this as we go along in the weekly updates, let me know. If you want to see different comparisons between the funds, if you want to see different percentages added, let me know. Head down to the comments, let me know what you thought. Subscribe to the channel to be able to be notified for each weekly update, and thanks for watching.